Welcome to the Luxury Rental Doctor podcast. Guys, we're back. This is the place, as you know, where we explore the intersections of financial freedom, work life harmony, and smart investing strategies. I'm your host, Dr. Rachel Gainsbury. Today, I am thrilled to introduce you to a dear friend of mine, Jamie Swartz. Now, Jamie is an absolute gem. She is an advocate for women in investing. She's got over 15 years of experience in the world of options trading, guys, as well as the stock market investing world. And so, what I love about Jamie is that she is empowering women to confidently navigate financial freedom and the financial landscape. So, in this episode, I want to delve in with her into her unique journey. We're going to talk about her insights from the trading floor and how mastering options can help you secure your financial future. I feel like I probably should do that intro again, but we're not going to do that. Okay. So let's get started. Jamie, let's kick things off by diving into your journey a little bit. Could you tell the people what initially sparked you and your interest and passion for investing in options trading?
Yes, love it. Thank you for having me. I'm so excited to talk about this topic. This is my favorite thing. Yeah, it's so fun. So I got exposed to the power of the stock market, I'd say late in my teenage years. I had a couple of family members who were interested in stock market trading and investing kind of as a hobby. I really wasn't exposed to anyone who was doing that as their full-time career.
Yeah.
But my interests growing up academically were in numbers and math and problem solving. I was just on fire about those topics. And then I did my undergrad education at Northwestern and I studied engineering and I got to do all sorts of numerical problem solving in that space.
Okay, so this
And
is all male dominated so far, which is very
yes,
intriguing, right?
oh yeah, yes. I don't know what the exact percentage was, but I would have guessed it maybe in the engineering school was maybe a quarter women, which was probably above the national average at the time. So I loved it. I loved the mathematical problem solving element. It was hard. It was grueling. That part I also actually liked. I'm a competitive athlete, so I was like ready to go and compete. And in one of my engineering professors had announced that he was going to be teaching a special topics course on options, and I didn't know what they were, had never heard of them, and I found out that he was a part-time professor. He was like, I think he was like 80 years old at the time. He was a professor, and also in the other half of his free time, he traded options. And I was like, what are options?
What?
And so I was really excited to take his class and learn, and that's where I was first exposed.
Okay, that is super exciting. And I love that when some of our professors, our educators, they have these side hobbies, like a little side hustle that they've got on the side, and they expose us to like what else is possible outside of the day to day of whatever that career or that job may be. So that's really dope. I love that.
Hmm.
Goodness. All right, so let me ask you this. Can you share a moment or a lesson that you learned early on the trading floor that just completely changed or shaped your approach to investing? Because I know you ended up on the trading floor. Could you just kind of walk us to that and then share that moment with us?
Yeah, it's a highlight for sure of my career and the start to my career. I started at an options market making firm here in Chicago,
Mm,
and about 1 year after I started, it took about a year to get up to speed on the training program, and my first role was actually to go to the trading floor, and I received that invitation. One of the biggest things I've learned in that environment is that it's the temptation to constantly compete is
ooh,
very tempting, and there are some for me there were some strategies I eventually learned on how to be uniquely competitive rather than trying to do the same thing that everybody else was doing.
mm,
So when I first went down there, I was 23-year-old female, which was kind of the double whammy of not who was on the trading floor at that time for both the age and the gender. And so I was not super well received. People were not ecstatic that I was down there. I wasn't taken super seriously to start, and it took a long time to build credibility, to get used to what that environment was like, and also to try to keep some of the elements of that environment separate from my life outside of it. That was
mm.
one of the big challenges was like the way that the trading floor works and the social environment down there, if you will, is not the way that the rest of the world works. And that was a big lesson for me that I gradually learned. But I think the biggest thing was eventually learning my strategic advantage was to compete in a different way.
Okay. Okay. So spill the tea, woman. Like, what are we talking about here? I know for one, I'm not familiar at all. So when you say the way that the environment is or that ecosystem in the trading floor versus the world ecosystem, could you paint us a little bit of a picture of what that looks like?
Yeah, I always say it's the only place where I think it's the only work environment in the world probably where you spend your entire workday physically standing around next to all of your competitors. And these are the people you're spending your whole day with all day, every day for as long as you trade on the trading floor. And also, on top of that, the level of competitiveness is substantially more intense
Yeah.
than most other industries. So, those two things coupled together is overwhelming. There's certainly like fear that comes up in entering an environment like that. You've got to have the right personality to want to be a part of that and
Right.
to be able to thrive in that environment rather than let it eat you up. But
Right.
that's the biggest visual that I can kind of give. I think
Yeah.
there's a very large game theory element to it that I
Mm,
also like to talk about. I'm fascinated with the idea of human decision making and behavioral science. And
mm,
and it was a fascinating real life learning opportunity to see and think through how other people make decisions and try to predict who's going to do what when, and
mm.
then make my decisions based on that. Like how can I compete to win, but also stay peaceful with the people around me and not let them completely run me over, but they're not actually the people I'm competing with them, but I'm not doing business with them. There's two different parties on the floor. And so balancing that social dynamic was complicated, but I think taught me a lot about how markets work because again, like it's the only in-person market experience that you'll ever find where that dynamic is present.
Wow. That's really interesting. And I know I'm going down a hole, an unplanned rabbit hole, but why are they standing around next to each other, by the way? And I see it, we see it on the shows, like what's
Yeah.
happening? Like I'm just intrigued. I want to just kind of parachute into your life while you're
Yeah.
there. So you're reading off the what's happening, Jamie. Paint us a picture.
Yeah. Yeah, I love it. I love like giving tours of the trading floor and trying to explain what's going on because it's very confusing and I was even overwhelmed as I was getting trained to go down there. I'm like, what in the world is going on? So there are I'm going to use a stock as an example because I think that's easier probably for the audience to relate to.
Okay.
The hottest stock in the market right now is Nvidia, so that's what I'm going to use as my example.
Yes. My
So let's
sister-in-law works for
say,
them, so I'm like,
yeah.
"Yay, Rosie."
Yeah, I have no view on Nvidia. It's just the hottest stock in this social media world right now. So let's talk about that, and I'll use that as my example stock. But let's imagine that electronic trading did not exist. Let's imagine that you could not log on to your online brokerage platform and execute a trade for yourself, and you wanted to buy 100 shares of Nvidia stock. In the 80s, you would have to actually call a stockbroker on the phone, and that stockbroker would have to call people who might be interested in taking the other side of your trade. So, in order to actually buy shares, someone
Mhm.
has to sell them to me.
Mm.
There has to be two sides to the trade. So, this is one of the parallels to real estate, I would say. Like, there has to be a buyer and a seller, which is true when you're
Yeah.
buying and selling properties as well. Like, in this case, the shares of stock are the property, but someone has to sell them to me if I want to buy them. So
Mhm.
pre-electronic trading days, you call an actual broker, and then that broker is calling other people who might want to be on the other side of your transaction.
Mhm.
The trading floor was created for that environment to be opened up to all of the participants at the same time. So I
Oh.
would call a broker on the phone who's standing in the trading pit, and then they announce out loud. And so this is a little, yeah, it's not exactly how it works, but pretty close. They would announce out loud, and they're trying to find who out of all of these market participants is going to be willing to sell me these shares at the cheapest price. because as the buyer, I want to buy them for as cheap as possible.
Oh.
So that's like one specific example of the mechanics. The different players in that situation, I in that example would be like the customer. I'm the one who's initiating the trade. I want to buy Nvidia stock. The stockbroker is the middleman. And then the other side, the market participants who I'm looking for are called market makers. So most of my career, I have acted as a market maker. So I stand on the trading floor, and instead of how it actually goes down, is that instead of a broker saying, "Hey, I'm looking to buy 100 shares of Nvidia stock," that's if I'm standing on the floor and someone says that to me, I'm going to try to charge them the highest price possible because I know that they're buying. So instead, they'll ask the market makers for a two-sided market. Where would you be willing to buy Nvidia shares and where would you be willing to sell Nvidia shares
Mhm.
to keep the information leakage out? You don't know whether the broker is going to be a buyer or a seller. He's looking for a fair market first
Mhm.
and then trying to get that market as tight as possible and then saying, okay, I'm going to buy these Nvidia shares and this is, you said you'd sell them at this price, so I'm going to buy them for that price. And so the trading floor exists to have all the market participants down there competing to offer the tightest prices.
Got it. Okay. So thank you for painting that picture. I truly, truly appreciate the fact that you had the opportunity to be there in the flesh in person because I tell my audience if I don't have a seat at the table, then I'm on the menu. And so thank you for what
Ooh.
you do for women by empowering women. And so what we know is that nothing bad happens when women have money. I truly believe that. Nothing bad happens when women have money. My dad says, "You guys like to go to Target a little bit too much." That's not a good thing, but nevertheless, so we know that women have 30 cents to the white man's dollar. Black women have a penny to the white man's dollar. So the reason I'm so passionate about this podcast is we're giving women an opportunity to be exposed to these concepts that otherwise we wouldn't even think that we could play in this big boys game. So you also have a strong focus on empowering women to take control of their financial future. Why do you believe it's important for women to develop confidence in investing?
Yeah, oh my gosh, there's so many there's so many reasons. I'm also very passionate about this topic for
Mhm.
sure. And empowering women. I think that I think there's a substantial amount of importance on women having control of their own finances
Mm,
because having control of your own finances really does buy freedom. It buys choice. And there are so many women who won't even look at their finances because they're either uncomfortable with it or typically what's coming up is fear.
yeah.
They're so afraid to look, or even if they are ready to look at their finances, they're so afraid of the idea of investing because all they can think about is losing money that they're not willing to take risk. So there's this conversation that I'm very passionate about teaching people what is risk, what does
Mm,
that mean, and how can we set some predefined quantitative parameters around risk so that we can manage the emotions that are coming up and not allow
mm,
the emotions to control our decision making. How can we empower women, typically specifically on how to put a little bit more structured framework around their risk taking opportunities
mm.
to sort of quiet down the fear voice, overcome the fear voice. Because the reality is, as investors, the fear voice is always there.
Yeah.
There is always risk in investing. But if
Mhm.
we can quantify it and get comfortable with what the opportunity is the potential gain of the investment. And then to me, risk is the potential loss. And how can I help explain that or create a framework around that to make people comfortable with women specifically? To be comfortable and excited with deploying capital into investments.
Yeah, I love that. And so, yeah, let's do it. Would you mind giving us like one or two tips or frameworks to guide us past some of those hurdles of fear of investing?
Yep. So I like to distill it down to I think there's four things that you need to know about yourself and your whatever you're looking at. There's four things that you need to know and predefine before you deploy a dollar into
All
any
right.
investment. The first one is you need to know how much money you have to invest.
Mm.
So this sounds trivial, but it's not. It's you need to take a very close look at your personal balance sheet and your personal income statement. So the balance sheet is, right, this assets and liabilities, meaning how much do I have and how much do I owe right now,
Mhm.
snapshot in this moment. And then the income statement would be income versus expenses. How much am I bringing in income monthly, quarterly, annually, and how much am I spending
Mm.
monthly, quarterly, annually? Let's get a handle on that and put numbers on paper for those things so that we're comfortable with how much is actually left over to invest. And let's be realistic about what that number is. Get comfortable with like, okay, here's how much is left over of that. Maybe half of it I can invest. And here you go. That's number one is how much can I invest? The second thing is what's your time horizon?
Mm.
So some people, I think that's really important. There are, especially in stock market world, there's the day traders who are looking to try to turn a profit same day, intraday,
Yeah.
second to second.
Yeah.
And I think that's the thing that causes a lot of anxiety and fear and panic in people when they think about stock market, like, oh my gosh, I can't do that. That's terrifying.
Yeah.
But what if your time horizon was a quarter or 6 months or 12 months or longer? When you talk about retirement investing, you're not talking about any of those time frames. You're talking about 10, 15, 20 years down the road. So
Mhm.
let's identify and define what is the time horizon for this specific investment. When am I looking to make the return that I'm looking to make?
Mhm.
The third and fourth to me go hand in hand. The third is what's your target return? I think that's important as well. And it's the same, all of these also have parallels to the real estate world, but what is your target return? What is a realistic target return? So don't get tempted to watch the people on social media who are talking about making 100% in 2 days. There's a trade-off for that, right? Like what is a realistic amount of money that I can look to make and and in what time horizon? And the third is what's my maximum loss? And I think that one is critical. What is my maximum loss and how do I remove emotion from that decision? And the beauty, I think probably a major difference between the stock market and options and what the opportunity is there compared to real estate is liquidity. That if I am trading in the stock market or trading options, I can get out of that trade whenever I want. And when I'm in a real estate investment and I bought a house, I can't just turn around and sell the house tomorrow. Like my capital is tied up in that house until I go through some multi-month long process to decide to liquidate or sell or refinance or whatever. And I'm at the mercy of other people's timelines on a lot of that versus in stock market world, it's typically I mean, you can open your own trading account for free. You can get in and out of your trades whenever you want. And so having that predefined, what is my maximum loss? And when I hit that number, I'm exiting, I'm closing my position and I'm starting over. I think that discipline is absolutely critical. And as I said, helps remove the emotion that comes up when that scenario occurs.
Gotcha. So, for those sitting in the back, explain that one more time for me, the maximum loss. So, it's if I hit a certain threshold of a loss, I take some sort of action. Could you explain that one more time, Jamie?
Yep. So I'm gonna go back to the NVIDIA example
Okay.
and or I'll just use that and make up a price. But I like to think about target returns and max loss in terms of percentages. You can think about them in dollar amounts as well. But how much money am I willing to lose before I am no longer willing to keep this position in my portfolio? So if I buy
Mm.
NVIDIA stock and let's say I'm trying to make, I don't know, 10% in a year on NVIDIA.
Yeah.
And let's say that my maximum loss I've decided in advance is if I lose 5%, I'm exiting.
Mm.
If my profit and loss on my investment gets to a 5% loss, like if NVIDIA stock starts trading at a price where I've lost 5%, I'm selling
Of your original investment.
of my original investment. So let's say I invested the $100,000 because that's an easy number,
Mhm.
right? $100,000, which would be a lot of Nvidia stock.
Yeah.
But if you did that and then it dropped down and all of a sudden your the value of your investment's 95,000, boom, I'm selling my Nvidia shares. I don't want them anymore because I decided in advance that I wasn't willing to lose more than that this time around.
Mhm.
There may be bigger, for whatever reason, there may be bigger market factors at play. It might, who knows what could be going on, but I'm not willing to lose more than that on that investment in this moment. And so I sell the shares.
Got it. Got it. Okay, so this is such, oh, I love a good framework, Jamie. This is so good. So we're asking ourselves number one, how much money do we have to invest? Number two, what is our time horizon? Number three, what is our target return? And number four, what is the maximum loss?
Yep.
This is so good. And it reminds me of how we evaluate real estate also, because for the maximum loss, we look at something I call a return on equity audit. And if the return that we are getting on a property, especially our beloved long-term rental landlords, if that return is a pittance compared to the equity that's built into the property, well, we might be better off looking at, you know what, how do I tap into that equity some, either a refinance or selling it all together. So I love a good framework. And this makes me feel better already as far as getting a little bit better understanding of what is involved and the fact that there's a structure around this investing approach. And so, Jamie, you mentioned something in passing that I think is going to be really important for our audience to understand. And this takes us back to the basics. So, for those of you who tuned in and you're wondering, okay, I don't even know what options trading is. That was me in the green room a few minutes ago. Okay, so hold on tight. I am not the expert in this realm at all, and that's why I'm so excited to have Jamie here to chat with us all things money, money mindset, and this particular approach. So, as far as the basics, when I think of options trading, I default automatically to day trading. Okay. So, I
Hmm.
would love for you to give us some definitions around what's options trading. How is it different from traditional stock investing or day trading? Could you paint that picture for us a little bit?
Yeah, yes, I can. Happy to. I'm gonna try. I try to make it as simple as I can possibly make it, easy to understand. So, because I want everybody to be excited about it and know what they are. So, I like to make the comparison, the parallel, the metaphor, if you will, between options and insurance. Options
Mhm.
contracts are insurance, and they are. I'm sticking with my Nvidia example.
Okay.
They are if I so options are contracts that are traded on top of something else. So
Okay.
in this example, we're going to talk about NVIDIA
Mhm.
options,
Mhm.
and they have different features and functionalities, but they're like insurance contracts. So there's two basic types of options.
Okay.
First one is a call option,
Okay.
and the second one is called a put option.
Mm.
Every single option that exists is one or the other, call or put.
Okay.
They options contracts have a couple of different elements in them, similar to an insurance contract. One of those is which stock or index is the option on. So in this case, it's on Nvidia stock. The second is what's called a strike price. That is predefined in the option contract. That is the price at which you can buy or sell the stock.
Mm.
Option contracts also have an expiration date, just like an insurance policy.
Okay.
And then there's something called American and European. I'm not going to worry about that. But the basic structure is call options are a contract that if you buy it, same as if you buy an insurance policy, if you are the option holder, you buy a call option, you're buying the right, but not the obligation to buy the underlying stock. Okay, so I'll say it again because
Mhm.
that definition gets wordy. Call option. If I buy
Mhm.
a call option on NVIDIA, I'm buying the right, but not the obligation. I'm buying the right, just like insurance, to buy NVIDIA stock. And
Mhm.
the last part of it is at a pre-specified price. That price is the strike price that I mentioned in my definition overview. And the last part is on or before the expiration date. So that
Mm.
also keeps mirroring that insurance analogy. Like, okay, these contracts are good for a limited amount of time,
Mhm,
and
mhm,
they're giving me the right to do something. In the case of a call option, it's giving me the right to buy whatever the underlying asset is. In this
mm,
example, it's Nvidia stock. So I'll do a specific example with some numbers. Let's just say that Nvidia stock was trading $100 a share. It's not, but that's what I'm gonna say
yeah,
for the example. If I bought it, let's say I wanted to buy an Nvidia call option that expires in a month,
mhm,
and I think Nvidia stock price is going to go up to $110.
mhm,
I might want to buy an Nvidia call option that has a strike price of 105,
mhm,
because what that option allows me to do is it's the right but not the obligation to buy Nvidia stock for 105, $105,
mhm,
which right now doesn't really help me out because the stock's trading 100. I'd rather just go buy the stock itself. But if I think the stock's going to go to 110 in the next month, then the right to buy it for 105 would be awesome,
yeah,
right?
mm,
So that's just the kind of how the mechanics work on the call option side of things. I'm buying a contract that makes money, that's going to have value if the value of the underlying asset goes up. Um, the flip side, the other option type is a put option. A put option, if I buy a put option, I am buying the right but not the obligation to sell the underlying asset. This one is always a little trickier for people when they hear that. Like, wait a minute, how can I sell? How can I buy the right to sell something that I don't own?
mhm,
Is usually the question that I get from, like, wait a minute, can I sell stock without owning it? The answer to that is yes,
oh,
you can. There's and that's a whole other topic, but there's a concept called short selling, where basically,
mhm,
let's say I wanted to sell Nvidia shares, and I that's what I want my position to be. I want to sell them instead of buy them. You can do that. There's a built-in cost for that. You essentially are, like, the broker has to borrow the shares from someone who actually owns them. There's a little bit of a borrow fee built into have that position. But anyway, that aside, like I said, it's a whole other topic. People are like, wait a minute, how do I sell stock that I don't own? You can, it is a thing. And the key phrase I keep saying over and over again is the right, but not the obligation, the right, but not the obligation. You don't actually ever have to exercise that right
mm,
on these options, and you can still be profitable.
hmm,
So the put option, you buy it, you buy the right, but not the obligation to sell something, the underlying stock, which means that put options become more valuable if the stock price goes down. So in my Nvidia example, let's say Nvidia is trading $100 a share in the market right now, and I think in the next month it's going to drop to $90. I might want to buy a put option that expires in a month, that has a strike price of 95, let's say,
mhm,
because then if the stock price does drop to 90, it looks like that's a good I would love to sell it at 95 and buy it back at 90. There's my profit, right?
yeah,
So that's the basic mechanics of directionally how they work. The cool thing is that you can play both sides.
oh,
Like, I think traditional investing wisdom is buy and hold, buy and hold, buy and hold. If it goes down, I'm screwed. I'm in trouble. I don't want to buy and hold. I think the stock market's overvalued right now. We just had one of the biggest stock market rallies ever in the last 48 hours. And so not everybody wants to buy and hold. That's scary. I get why that's scary. But the beauty of options is that they give you the flexibility to invest either direction.
mm,
So if you are thinking, hey, you know what, I don't actually want to have a lot of, or I have some of my money exposed to the stock market, but what happens if the market goes down? Then maybe a strategy for you is to buy some put options
mm,
and offset some of the money that you will lose on your stock. Your overall, typically people are exposed to the stock more along the market in our retirement accounts or wherever. Then maybe buying a put option will help you offset some of those losses, because the put options become valuable if the market or Nvidia or whatever your option is on goes down. So that's one of the strategies. But anyway, that's about it. Simple. Hopefully that made some sense. And my insurance analogy, that call options are like kind of protecting against the value of something going up. Put options are protecting against the value of something going down if you are the policyholder. Now, the thing that really turns it on its head is that you actually can be the insurance company.
Mm.
And that's kind of the mic drop thing. People are like, "Whoa, wait, what? I don't have to just be the buyer. I could be the seller of these things." And so then it gets a little trickier. There's some things that have to be in place, but that's the thing that I get the most excited about is just the flexibility and the versatility, and all the things are possible if you know how to use options.
Interesting. Oh my goodness. Okay, so this is really interesting, and it reminds me of we're both a part of a mastermind of women who are doing great things, and there's a counterpart to our mastermind, the male side of it, and there's a couple of them that had shared with me some of their experiences with options trading, like rah rah rah, and they were going all in, and then when we circled back, these were fellow pharmacists, we circled back, it wasn't going so well, Jamie, it wasn't going so well.
Hmm.
So my question to you then is, why do some do very well and why do some experience a complete failure, essentially? So what would you say were those critical components maybe that may contribute to uh them doing well, and what is like the one or two key components that you think are critical for those who have experienced massive pitfalls with options trading?
Yeah. Well, some of it goes back to the four principles
Mm,
of defining your risk in advance. So it's the how much money are you looking to invest?
yeah.
What's your time horizon? And the how much are you looking to make and what's your max loss? Because a lot of in the last few years, this explosion of retail trading is very powerful and also very dangerous. And that's there's the biggest, probably most important concept in the world of options is this concept called volatility. And
Mm,
I think that applies to any market and any investment. But what is the volatility of my investment? Which means like volatility is a definition of how much can this asset move. What
mm,
is the expectation of how much this asset could move in value either direction? And I think one of the biggest pitfalls, especially during the initial explosion of retail trading, the retail mania back in 2021, was everybody wanted to get on the bandwagon, and the bandwagon was moving at light speed. And there were stocks that were going up, over 100% in a day in some cases.
yeah.
And everyone's like, oh my gosh, it's exploding on Twitter, it's on Reddit, it's on all these things, right? And I know I was in the middle, I was working at a gigantic hedge fund in the middle of that. So,
Okay.
I was following it all very closely. But I think that
So
the
can you tell us
temptation
what
was,
is retail though? So define retail
yeah,
versus what you were doing. So you weren't in your basement necessarily. Maybe you were trading.
yeah,
Like, help me to understand. Paint
yeah,
that picture for me.
the terminology. So, traditional investing Wall Street world
Hmm.
is full of a bunch of what we would refer to as institutional investors.
Right. Okay.
Institutional investors, hedge funds, banks,
And that's
foundations,
what
family
you did, right,
offices.
Jamie?
I
Primarily.
was yes,
Okay.
everything that I've done in my career has
Yeah.
been working for financial institutions, and I would be considered an institutional investor.
Got it.
Um, Retail is the word that is used for like anyone, me,
Like
individuals, like
the
random people
hobbyier.
who are logging into their brokerage account trading, and it just didn't. So it's not really that it wasn't accessible. It was accessible. I remember I opened my first trading account when I was 18 years old. So retail and the like idea that retail can access the market is not a new phenomenon.
Okay.
What's new is the momentum of social media hype that people kind of plugged in with it. And these two things combined, plus during COVID, everyone's sitting at home. either not employed or employed and bored or looking for something to entertain themselves, and it became gamified. So those three things combined just made this idea of retail trading kind of explode.
Mm-hmm.
But yeah, retail refers to anyone who's not trading or investing as part of a larger institution.
Got it.
That market of people and also the financial size of that market has grown astronomically in the last 2 or 3 years. There are a lot of people and a lot of capital getting deployed from the retail community. Is a very hot topic, and
Mhm.
I think our audience is that, right? That's
Yeah.
who this is who we're speaking to, and very wide range of how to get involved
Yeah.
and what to look out for. The pitfalls are there's a whole bunch of message groups. Everyone's looking for the next hot pick and everyone wants to get on the train with everybody else. And that works until it doesn't. It's back to that concept of volatility. So I had people ask me a few years ago about Bitcoin and Bitcoin related companies. There were a couple different stocks that were Bitcoin mining companies,
Mm-hmm.
and they were getting talked about in some of these groups, similar to our men's mastermind. Like, oh my gosh, you got to get involved. People were saying the same thing about Nvidia over the last 6, 12, 18 months. You got to get involved. You got to get involved. It's like a total no-brainer. I'm like, yeah, it's a no-brainer until it isn't. Go back and look at the 5-year chart of Bitcoin. It exploded, and like any other cyclical investing environment, it eventually crashed.
Mm.
And it crashed very aggressively.
Mm-hmm.
And that same thing has happened on repeat on some of the more social media hype
Yeah.
stocks. I mean, in 2021, when this all first started, there were a couple that just absolutely exploded and then fell off a cliff. And all of that's the volatility. It's like, okay, if it can go up 100%, then it can go all the way back down. And by the way, that can happen in seconds. It doesn't even have to be days. And so the people that are getting burned sometimes are the ones who are getting super excited about
Mm.
getting on the wagon, but they don't have that how much am I willing to lose metric predefined.
Mm.
And then they find themselves having lost more money than they were actually comfortable losing because they didn't define it in advance.
Mm. And then jump when, when it things started to go sideways a little bit. And that's what sadly I have a few folks in healthcare who've lost six figures worth of savings because everyone was doing it. And so
Hmm.
guys, this is the cautionary tale, just don't go in without having access to the right information just because everyone else is doing it. It's almost like if it's too good to be true, right? Situation, it probably is. Yeah.
Yeah, and I think also it's back to the first question on the four items to know before you invest a dollar. Knowing how much capital you actually have to invest, I think it can go a step further in breaking that capital into buckets. So if
Mm.
you want to get involved with some of the riskier, higher volatility things like, hey, everybody's saying to buy whatever stock,
Mhm.
then out of your investable capital bucket, maybe you do have a piece that you're willing, that's like play money, or you're willing to take on that higher risk thing because you think the reward might be great, but you're also aware that you could lose all of that. Let's predefine what that. It's like going to the casino. It is a
Yeah.
casino. If you're going to trade like that, that's what it is, in my opinion. So be
Wow.
ready to lose all your money at the casino for that part, but you also could double your money.
Yeah.
But don't make all of your investable capital fall in that bucket, or you're
Yeah.
not, you have the potential to not have any left.
Yeah. Yeah. So, I mean, and that's one of the questions I had for you is like, what's some practical advice for our medical professionals and, all others who are listening right now who are high earners who want to explore options trading and they have time constraints because it sounds like you have to have a level of expertise and it could be demanding on our schedules. Anything else you want to share as far as practical?
The first most important thing is just education. Like, you've got to
Mhm.
understand the contracts and how they work. There's all sorts of different strategies you can implement that don't require a ton of your time. So you can, if you're trying to do it on a daily basis, you can place your opening trade in the morning. You can put a specific order type in that is a
Mm.
stop order. I use stop limits is typically what I tell people to look into. But basically, you put in an opening position, and if it gets to your max loss, a trade's going to automatically execute. So there are some things you can put in place to sort of manage things and not have to be logged on every single second of the day and watch it
Mhm.
all. I think the other thing, so it's education on figuring out how do options work. You can actually package them together. So you
Mm.
can trade one call option versus another one. You can
Mhm.
do the same thing on the put side. I think that packaging options together is one of the more powerful strategies. How people are generating additional cash flow is typically using strategies like that. So that's something I highly encourage people to check that out. But I think the other thing is in terms of the investing time horizon, everyone gets so caught up in the day trading
Mm.
thing.
Yeah.
There's a way to use options as an overlay on top of your existing market portfolio that has a longer time horizon, or it doesn't have to be overlaid on top of an existing investment, but you don't have to use options that expire today or tomorrow or in a week. Like there's some longer term, I'm going to look at options that expire 3 months out. And do I want to package that up with an existing stock market portfolio investment, or do I want to do it independently? And then let me make sure that I understand what are the profit and loss potential for if the stock or index, or whatever I'm trading option, if it goes down, if it goes up, if it gets these certain prices, what does my overall profit and loss look like? And do I have a plan for it's back to those four principles. But the time horizon thing I think is big for people who are super busy full time doing something else. Like I don't want to be logged on for hours a day. I don't have the capacity to do that. I'm on call. I can't check this all day. Then maybe the answer is something that is a longer time horizon strategy, and you can use options as a component of your portfolio, and then maybe you're checking in very briefly each day to see like where the market is, where your stock is trading, and then like, okay, I'm good. I'm going to leave my position on. So there's some risk management strategies you can put in place that have kind of some built-in automation, but I think that time horizon turns into the key thing when you're talking about people who are busy during the trading day.
Yeah. Yeah, that's interesting. So our community, Jamie, as you know, is primarily real estate investors. So how would you see these strategies supporting or being complementary to our real estate portfolio, for instance, to kind of hedge against, say, we've got interest rates that are going up, so we may not be keen on doing certain transactions. Any thoughts about what that would look like?
Yep. It goes it's the versatility of options is the key here.
Mm.
Like I mean, if we're looking at, we've been having conversations for it feels like years now about the impending recession and what happens if the real estate and stock market tank at the same time, and 2008, and everyone wants to point back at that, like that's what's coming. And if it is, I don't know if it is or not. It doesn't seem like it, but who knows? There's ways to use options to make money in that scenario. So there's ways to make money in that scenario. There's ways to like you use the word hedge. That's what
Mhm.
options are for. That
Yeah.
is one of the primary strategies of using is hedging your portfolio. So that could be you are using options in stock market world to hedge some of the risk of your real estate portfolio. If you think those things are, if you think those things are correlated, if you think the real estate market has the potential to drop in value, and you think the stock market's also going to drop in value, then you should execute some options or put in some options positions in your portfolio that make money if the market drops. And that helps offset your loss. There's also strategies where one of the most common strategies for retail and institutional investors actually is something called a covered call, which means you own the underlying stock. So back to Nvidia, let's say I own Nvidia stock, and I think Nvidia is going to continue to go up over time, but in the meantime, I'd like to add some cash flow to my portfolio. People will sell call options
Mm.
against owning the stock. And the way that that works out is that for some amount of dollars that Nvidia continues to go up, you'll make money because you own the stock. And at some point, there's a call option that you have sold that offsets that. Those two things offset. And like, so there's a graph anyone can go check out what a covered call looks like graphically, but that is a very common strategy because in general, the market goes up over time. There's just all sorts of historical graphs, inflation adjusted included, that the market goes up over time. And so if that's the case, then, and you're going to have long exposure, own the stock market, then maybe there's a way to overlay option strategy on top. So anyways, the covered call strategy is a good one, I think, for people to just learn about and see if that is a right fit for a way to potentially generate some more cash flow. Now that strategy doesn't have the same hedging
Mm-hmm.
functionality as if you're buying a put up, right? Like back to the education component. It's very important to understand the numbers behind all of that. Like how much do I stand to make or lose in
Mm.
these different strategies? And does that fit what I defined at the beginning, where my target return and my max, like make a plan around the strategy, but make sure that you have a handle on what that strategy is, how it works, what are the numbers, what does it look like graphically? Can you wrap your mind around it? And then test it out, I think is the last thing.
Mm-hmm.
People are very afraid People are very afraid to deploy capital. So sometimes I suggest all of the brokerage platforms, or pretty much all of them, have fake trading accounts. So you can practice, you can make fake trades with no real money and implement what you thought maybe you wanted to implement and see how it performs. Get used to tracking it in your account, seeing the numbers. How do losses make you feel? How do gains make you feel? What comes up? And then I think there is just so much power in actually deploying some real money at some point. That can be a tiny amount, but there's so much more emotionally on the line, in particular for women. There's so much more emotionally on the line when there's real money behind
Mm.
it, just with anything else investment related. And so I think there's a lot of lessons to be learned and eventually deploying some real money.
Mm. I think that's a whole gem right now. Like that dummy account, setting up that dummy account and getting your feet wet a little bit before you start to deploy some test capital. I love that. And I think it will help mitigate against what we know to be true, the F word, fear, right? Lots of fear of risk, or there's fear of lack of experience. And so go and get you some experience, right? So
Hmm.
I love that. So speaking of the F word of fear, let's talk about another one, failure. What lesson, Jamie, would you share, if you will, where at one point you felt like, oh, that was a complete failure, but it ended up providing you with like a super valuable lesson, maybe created an amazing benefit for you long term? Do you have anything personal or stock related, something that could help the women on the call?
Yeah, I mean, the one that comes to mind from an investing standpoint is principle number 4, have a maximum loss. I have been a part of institutional portfolios and also my own trading where we don't have a predetermined loss amount. And
Mm.
I've watched that number go farther than it should have. And I've
Mm.
watched emotions, both my own and team members. I think that dynamic is particularly interesting when I'm on teams with men. Not everybody's the same, but they tend to be very stubborn when their trades are losing. They'd rather double down than exit.
Wow.
And I experiencing that process and not having any sort of risk constraints in place, like, hey, if we lose this amount of money, we're getting out, and just watching it go farther and farther and farther, like, well, how far are we going to let this go?
Yeah.
Has been such a valuable lesson in watching how the money part of that works. There
Mm.
have been times where because we let ourselves, lose, but we didn't actually close it, it ended up coming all the way back. I'm like, okay, how do you maybe there's environments where that makes sense. In general, I don't think that makes sense, but it's taught me to make a plan in advance
Yeah.
so that when that situation presents itself, there's already things in place. So it's entering, if I have an existing position, it's entering the closing, or like I mentioned something earlier called stop order, stop limit order. I
Yeah.
can put an order in advance that's like if Nvidia stock goes, I own Nvidia for $100 a share and it goes to $95, I have an order already in that if it
Mm,
goes below $95, it's selling. It's
yeah.
gone. It's out. The decision's already made before it ever gets there. And so then you're like, all right, cool. Not ideal outcome, but what next? And you can make a fully informed next decision. So I would say that's the thing is I've watched various different portfolio managers, male, female, myself included, learn like how do you respond in the face of losses
Yeah.
as they're happening? How do you remain forward looking
Mm,
as losses are occurring and get rebalanced and level headed to make the next best decision for moving forward?
love that. This has been so invaluable. Oh my gosh, I cannot wait for the community to just follow you in all the places and connect with you online. Let's move forward with our rapid fire. It's time, my friends. So, we're going to have some really quick three questions. It's going to be fun. First and foremost, can you share a moment when you felt completely burnt out and how you overcame it?
Yes. Moment I felt completely burned out. I have to say, I spent most of my career building and building and ascending and building and kind of climbing the ladder. And there, by the end of my time at the hedge fund,
Mhm.
I actually, it came up in our women mastermind community. We were at a retreat, and I was talking about feeling very exhausted. I was talking about feeling like I didn't have any control of my time. I felt I appreciated the value of the opportunity and I appreciated what I was getting out of it, but I felt like it was monopolizing me. And really, what was going on was there was a values misalignment on a couple
Mm,
things. And also, I didn't have the capacity to take care of me in the way that I wanted to. It was one of the biggest things that came up. And so it was a deep dive on what are my values?
mm,
What are my values? Is it that I really want to continue to ascend and ascend and ascend and just stay in this world and work as hard as I possibly can for as many hours as are required? Or is there something else? Could that look a different way? And do I need to shift something?
mm,
And so yeah, I definitely I felt physically, mentally, emotionally pretty exhausted at the end of that
mhm,
because it was not aligned with where my values were headed.
mm. So, revisiting our values, revisiting our non negotiables is a good way to realign and overcome that burnout. I love it. I love it.
Hmm.
Question number two. What's a book or resource that completely changed your perspective on work or life?
Yes. I love I love all the mindset books. My favorite, the one that impacted me the most, and I do them now on Audible
Mhm.
mostly. So I try to get through a ton of stuff. The one that has stuck with me the most is The Gap and the Gain.
Oh, yes.
Oh my gosh.
Benjamin
I
Hardy, Dan Sullivan. Yes.
Oh, yes, yes. The Gap and the Gain, it life changing. I use it myself. I'm always trying to remind myself to keep doing, but it's the idea that like here's where I am now, here's where I want to be going, and here's where I was before. And that
Mm,
most high achievers are so focused on where they're trying to go that as soon as they get to a place, it's like it didn't even happen. And they move the goalpost and move the goalpost over and over and over. And the danger of that is that it actually causes anxiety for people because they never feel good enough. They never feel like they're accomplishing. And so the whole premise of the gap is the difference between where I am now and where I want to go. The gain is the thing that needs to be the focus, and that's the difference between where I am right now and where I was before, where I came from,
yeah.
and a real tangible focus on celebration. So I have at various different points implemented gains journaling into my daily
Oh.
routine. I like it as a nighttime routine thing. I coach high school club volleyball and I teach the girls this as well, that we do gains. We talk about gains all the time. What are your top
Mm,
three? What are your top three gains from the day if it's a nighttime thing? And what are going to be your future gains tomorrow? That
mm,
is a very different packaging than thinking about it like a gap. Like I'm not
Mm.
there yet versus like what are my wins going to be tomorrow?
Oof, that's a whole
Yeah.
masterclass, woman.
Yes.
Yes. I love that. I love that you have the gains journaling. I love the book. I read it multiple times as well, but I hadn't implemented the gains journaling, more like the gratitude. But I think the gains journaling adds a special, and that resonates because you're right. I'm always moving the goalposts because I want to be better, go harder, get better, blah, blah, blah. Right. And then it's like, dang, girl, look at how far we have come. And we never
Hmm.
really let that resonate in and just sit in that for a moment. Look at how far we have come. Listeners,
Yeah.
listeners, look at how far you've come. I know you made it. You graduated, you went on, got the doctorate. You're sitting here and it's like, oh my gosh, let me battle these student loan debts. Oh my gosh, let me try to get this house. Let me try to get this car and save up for college, right? For the kiddos. And so, but look at how far you've come.
Yeah. And they talk about in the book
Yes.
the irony of it all, the psychology behind it is that when you focus on the gain,
Mm,
it actually ends up being the fuel to propel you farther forward
yeah.
than where you would have gone if you just focused on the gap.
Yeah.
That's like the mic drop thing in that book. Like if you focus on the gains, it's actually
Yeah.
fueling your future growth.
Mm.
Yeah, it's awesome.
Love that. You know what? I think this is the season where we need to dust that book off and give it another read, give it another twirl as we prepare for our
Yeah.
quarterly planning or 2025 mapping out. So this is good. It should be our annual quarterly planning or annual planning meeting book to remind ourselves, right?
Hmm.
Oh
Start with the
goodness.
gains. Yeah.
And last but not least, what's the craziest real estate or investing story that you've heard or experienced?
Mm. For me, it was a close call. It's a close call between two. They're both trading related. The
Okay.
first, yeah. The first is trading floor story. So
Okay.
I spent roughly 5 years on the trading floor of the CBOE here in Chicago. And I
What does
was
CBOE stand for? I'm sorry.
so it stands for Chicago Board Options Exchange. There are two trading floors in Chicago, and that is one of them. The other one is the Board of Trade, which is the one that everybody kind of thinks of. But
Smaller woman. Goodness.
anyways, I was on the board of the SIBO, and two of their flagship products are something called the SPX, which is their S&P 500 cash index, and the other one is called the VIX. And the VIX is the volatility index, and that gets talked about a lot. It gets a lot of press, a lot of it, but it's a measure of volatility. It's a measure of volatility of the S&P 500. And I was trading VIX options in the pit. I was down in that pit for about a year and a half, and I happened to be down there during something that the market has now named Volmageddon. And at the time, it was the single largest intraday percentage move that the VIX had ever seen. So basically, there was another product that was tied to the VIX. There's all these, there's a lot of offshoot products that are all tied to each other. And there was one that was like an inverse of it gets kind of complicated. But long story short, the VIX went up 150% in like half an hour.
Wow.
And I was in the pit. I was seeing when I talk about the experience of being on the trading floor and standing next to all of my competitors and really feeling and experiencing the market, there is nothing like that where you watch what implications that has for people. You could kind of sense the tension of that, obviously, is very chaotic. There was a lot of panic, and it happened at the end of a trading day, so people didn't know what to make of it. It was scary. It was like we don't know what happened. Why did that happen? What's going on? Most people down there lost a bunch of money, and then the next couple trading days were insane. Absolutely insane. Like every broker is asking for, I mean, yelling 7 hours in a row, 4 or 5 days straight.
Wow.
Everyone's again like trying to figure out, are they losing money? Are they making money? How do they make the money back? What do they do? It wasn't possible you can't get out of all of your positions in 20 minutes typically. People are holding positions that are bigger than that. And so how do you stomach some of those losses? How do you stay focused? How do you, while you're standing in the audible and visceral chaos, how do you keep the level head on and keep moving forward was a big challenge. And I never, I mean, I had been training for years at that point, but I had never experienced something quite that intense in
Mm.
person. So that's probably the biggest one. I point to that example a lot. You can look up Volmageddon and read all about it, but it was just yeah, completely ultimate chaos. And the other one is just watching retail mania unfold during 2021. Like the first when that became a thing during COVID and people started trading these stocks, and Wall Street bets on Reddit was a thing, and everyone was following that and following Twitter and following, someone would tweet something and a stock would go up 20%. And it's like, what in the world is happening here? Like, really, what's happening? Who's doing this? Who's buying and selling? How do I make sense of this? It
Right.
was very
And then the
difficult to make sense of
GameStop thing,
it.
was the GameStop thing around that time? I
That
don't
was one of the big
understand the
ones.
ins and outs, but
That was one of the big ones. And so who are the players who are involved, and why are things moving the way they are? And it doesn't make any sense. And so that was another one where I wasn't physically standing like on a trading floor where all my competitors were there. And that was the hard part, was that everyone was behind their own computer screens.
yeah.
So it was very difficult to tease out what was going on, who was involved, why
Mhm.
people were doing what they were doing.
Yeah.
And so that one was the other like total chaos. What in the world? I think now, 3 years later, retail trading world is substantially more stable, but there are still glimpses
Mm.
of that type of thing. There are still people who are very attached to social media, trending, things going viral. They're looking to see what stocks people are talking about. There's people are writing algorithms that are like scraping the internet all the time, looking for what's the next stock I can ride the wave on. So that one is still continues to be pretty
Wow.
fascinating. But the kickoff of that was just wild.
Oh my goodness. Ugh. This has been enlightening to say the least, Jamie. I think you're one of the most unique guests that I've had on this show because we typically talk all things short term rentals and related uh, vendors and resources and services associated with short term rentals. But I wanted to bring you on just to get our community to start allowing the wheels to turn around money, how money works, money mindset, what else is out there, what's possible. And so you have delivered, woman. So thank you so much, Jamie, for sharing all of your invaluable insights and experience with us today. I would love you to share, how can people follow you? Where can they connect with you the most?
Yeah, the easiest places are LinkedIn and Instagram for
Okay.
me. So my name spelled as it is. But yeah, I'd say LinkedIn and Instagram probably the easiest ways to stay caught up on what I'm up to.
All right. So be looking out for Jamie Shorts, and we'll add her links in the show notes below. Definitely connect with her. She is one that you will want to follow as you continue on your investing journey. So, Jamie, again, thank you for your passion for empowering women through financial information, financial literacy. I think what you're doing is truly inspiring. And to our listeners, definitely follow Jamie and all that she's doing in the options training world, money mindset, all that good stuff. And be sure to check out her website at Jamie. Is it jamieshorts.com as well? Okay.
Yep. Yep.
jamieshorts.com. Alrighty, guys. So remember, the journey to financial freedom starts with one brave step. I'm Dr. Rachel Gainsborough, and you've been listening to the Luxury Rental Doctor Show. Until next time, keep investing in yourself and in your dreams. Bye bye for now.